Thank you for that great introduction, and I apologize to everyone for the voice or lack thereof. I had some elective surgery on my vocal folds 2 weeks ago. It's going to take a little time to heal. So if I sound like an old man, it's because I am. If I sound like I had surgery, it's because I did. But I will do my very best to be clear and concise with you. What I have to show you today is a little information on why traders lose and how traders win. The fact of the matter is that I've been all over the world. I've been trading for 54 years. I've seen traders everywhere in every country. I've seen people make money. I've seen people lose money. I've participated in live trading contests in front of hundreds of people, and I've learned a lot. And what I've learned is mostly this. Traders are not interested in how well their strategy works. They simply want to trade. The questions they should be asking, they don't ask, like, how does your strategy work? What's the percentage accuracy? What's the stop loss? What's the profit target? Excuse me. What's the profit target? And so forth. So what I'd like to do is share with you some very important facts today. And Dave, is this sounding okay or not?
Yeah, we can hear you.
Okay, good. As long as you can hear me, that's all I care about. I'll try to speak as loud as I possibly can. The fact of the matter is this. Everything in trading has to do with patterns. Every trade is a pattern. Many people are familiar with patterns, such as support, resistance, triangles, head and shoulders, flags, breakaway gaps, reversals, key reversals. The good news is there are thousands of patterns. The bad news is most of them don't work. They don't predict anything. How do we know that? We've got computers. If you can define a pattern in rules, in algorithms, you can put that pattern on the computer and test it and get the numbers. So you will know, has this pattern been successful in predicting anything? Does it predict tomorrow, the next day, the next hour, the next minute? If we know how to do it, it's easy. But most people don't care. They would rather spend hours and hours researching a television repairman on the internet than ask the question, how well does my trading strategy work and what's been the track record? So I'm all about numbers. I'm all about organization. And what has contributed to my success over the years has been asking the right questions. Traders lose money because they don't ask the right questions. All they care about is what to do. Someone will tell them what to do and charge them money for it, but they won't give them the track record. So everything I do is all about numbers, all about statistics. I know it's boring, but it's true. So the first thing I will tell you is this. The trading model is the most important thing you can have. I'm going to show you the trading model that took me 15 years to develop and become a successful trader. And that trading model is called setup, trigger, and follow through. Many of you already know that model from my previous work and from my books, but let me review it for you and hope that I can turn you from being a loser to a winner, or turn you into a bigger winner if you're already a winner. Setup. Setup is a pattern. I've already mentioned some of the patterns. Cycles, seasonals, Fibonacci, Elliott wave, reversals, key reversals. These are all patterns. Every pattern needs a trigger. So for example, if I research a pattern and I find out it's been accurate 70% of the time in the last 50 years, the question really is, what will it do this time? Is there anything I can look at right now to help me determine if the pattern will repeat? That's called a trigger. Most people call it timing. So in order to be successful, you need these two elements, a pattern and a trigger. I'm going to show you some patterns shortly, patterns that are very accurate, but I'm going to show you how we get all the statistics we need on that pattern. The third step is follow through. Every trade has three possible outcomes. You make money, you lose money, or you make money and you manage your profit to maximize it. So there's three parts to this, to the follow through. Number one, you're going to get out at a stop loss. Number two, you're going to neutralize your position by taking some money off the table at a profit target. And number three, you're going to keep part of your position for the bigger move called profit maximizing. If you don't have all three elements in your strategy, you are going to lose money, or you're already losing money, or if you're making money, you're going to give it all back. So the bottom line is this. Traders don't make money or lose money based on discipline. They make money or lose money based on the confidence they have in their system. If they don't have confidence in their system, they won't make money. Well, how are they going to get confidence? They're going to get confidence through the numbers. And what I'd like to do is show you a way how you can get this confidence from the numbers using seasonal trades. So I'm going to switch screens. So just bear with me, Dave. I'm going to change screens. One moment, please. So just bear with me, folks. Just hang in there. Dave, has my screen changed?
No, it still shows the same thing. At the
Okay.
top where it says show screen, you can use that pull down menu and pick a different thing to share.
Right. That's what I'm going to do right now.
There you go.
Okay, and you see seasonaltrader.com, right?
Yes.
Okay, good. Let me log in there. Just one moment, please. Okay, I'm going to do something that most people won't do. I'm going to do a little bit of research. So you should see my screen, and on my screen you should see to the left the futures markets. I'm going to go to the S&P. So here we are, S&P. I'm going to ask the computer a question. The computer contains massive amounts of historical data. It contains data on practically every futures market going back many years, including stocks going back as many as 100 years. I'm going to go to the month of February. I'm going to ask the question. Are there any patterns in the S&P futures in the month of February that have been right 75% of the time? So what am I doing here? I'm doing a search, a massive search of a huge historical database. I'm going to go like this. Look what the computer tells me. It says if I bought March S&P futures February the 10th and got on February the 15th, my accuracy would be 81%. So in other words, this strategy was correct 81% of the time. Now I can look at the static and the history. Let me show you the history. Every trade, every year, for the last 27 years, the complete track record. Here it is. Year by year, cumulative results right over here. And remember, this is hypothetical. This is all built on the backtest of history. One moment, please. This is all built on backtesting history. So what does it mean? What does it tell me? It tells me my percentage gain, accuracy right over here, 81% accurate. It tells me maximum consecutive losers, maximum consecutive winners, 27 years of history, average profit, average loss, stop, everything I need. That's the kind of information I'm talking about. Not only that, let me show you something else. Let me go back to this. Just a moment, please. Sorry about that. Just bear with me. So now I have the complete history. Let me show you something else. This is the seasonal chart. In other words, just bear with me, folks. It's coming right up. So if I took every year of S&P futures from 1982 to 2025 and made one chart that represents the history, it would be this chart right over here. This yellow period is the period that we isolated, the pattern that I just showed you. And you can see that it's very specific. I can also do this on a daily basis. Let me show you what I mean. Let's say I wanted to know what happens day by day. Let me show you this. I'm going to expand this chart into a daily chart. And at the bottom of the screen, it gives me my percentage accuracy for every trade. So just hang in there, folks. There's a massive amount of data that's being crushed right here. There we go. Let me explain this to you. This chart says that in January 23rd, 24th, and 25th, 3 days in a row, the probability on the upside to the tune of 63%, 67%, and 63% of the time, followed by a down move 68% of the time. So what I've done is I've gone from the big picture to the very small picture and analyzed this very accurately. I'll tell you this, for example, from February 9th through February the 14th, there's been a tendency for prices to go up fairly strongly, and that's reflected on this chart. So this is all based on history. And let me tell you something else. Let me go back to the weekly chart. And apologies to you folks. Earlier this morning, I had a voice, but now I don't. Totally unexpected. So let me go back to the search. One moment, please. So I want you to look at the information that you got. You know what market to trade, the contract month, whether to go long or short, the entry date, February the 10th, end of day, date to buy, exit date, February the 15th, end of day. Your stop loss, 2.5% below your entry price. The profit to loss ratio, what does that tell us? The profit to loss ratio tells us when you're winning, you're making 8 times as much as you do when you lose. Very impressive. Accuracy has been right 81.5% of the time. Your average profit in points, your average loss in points, your average profit in percent, average loss in percent, maximum consecutive winning trades, the maximum amount of money made in the winning trades, maximum losing trades, and did it have positive growth? You can see the entire history right over here, trade by trade. There it is. Every year, every trade. And remember, this is all hypothetical, of course. So the question is, what happened this year? You can go ahead and look it up and see what happened. So we know everything we need to know. I respectfully submit to you that most traders do not have anywhere close to this kind of information, but they still are willing to risk their money, even though they don't have all this data. The data is the most important thing we have. Let's go forward. I'm going to go back to the search and show you what's coming up. So just bear with me, folks. Return to search. Now let me show you something really interesting. I'm going to go back to my seasonals in stocks, like so. And I'm going to go to S&P, to the Dow Jones actually. So let me go to the Dow Jones. I'm going to take the Dow Jones back to 1920. So I ask you, who in this business is willing to go back and look at history to 1920 and ask a question for the entire year dating back to 1920? Have there been any trades that have been right? 80% of the time. So let's look at the big question that I'm asking. I'm asking the computer to show me, has there been anything in the stock market back to 1920, about 100 years or more, that's been right 80% of the time? What do you think? I'm going to put in a stop and say, I don't want to risk 100%. I'm just willing to risk a large amount and search. And what does the computer find? It found buying the Dow Jones, end of day, October 26th, getting out end of day, January 10th. Willing to risk 15% stop loss only has been right 83% of the time. And look at the history. This is truly impressive. So let me go back over here and bring up the history. According to this rule, the last 96 years, like this. So there's the curve, there's the data. The question is, do you have this kind of information available on the strategy that you're using? The answer is probably no. If you don't, you're not playing with a full deck. Let's look at something else. I want you to remember that during this period of time, we've had all sorts of events. Several world wars, Vietnam War, Korean War, embargoes, bank failures, the Great Depression, you name it, you've had it, and still the accuracy persists. So let's go back to the search. And guys, I don't mean to stress you out with my voice. I'm doing the best I can. Okay, let's go back to the search. And let me show you something else. Let's ask a question. At this time of the year, what does the gold market do? So we can go back to futures like so. And ask the question. When is the best time of the year to trade gold? Is there anything in gold that's been repetitive, that's been a pattern? I'm just going to select all the entire month of the year. I'm going to say I don't want to see anything that's been right less than 75% of the time. I'm going to do a search. And this is a brilliant research tool. So we have a trade December 15th through December the 25th with 77% accuracy. And I've got all the numbers here. And let's look at the history. So this great research tool called seasonaltrader.com belongs to me. I've been using it for about 25, 30 years. It's very accurate, very effective. Not perfect, but it's very organized. And it gives you all the information that you want to have as a trader. So here's the history right over here. And let's look at the growth curve, the equity curve. There it is. So what's been happening for the last 10 years or so? In the last 10 years or so, it's really taken off, gone crazy. Let's look at something else. Let's go back to the search. Let's go back to the search. A moment, please. That's another question. How about another market? How about crude oil? So I'm going to check this and ask the question. What has been the best trade of the entire year in crude oil? So let me find that. Just one moment, please. Here's crude oil. And remember, in many cases, this database goes back to the start of trading in that particular commodity or stock. Let's search. Our best rate of the year, 78% of the time, December 20th through December the 24th. Let's look at the history. "41 years And here's the entire track record. And what do we see? We see a little bit of erratic behavior, but nonetheless, last year was at its peak cumulative profit. Let's go back to the search. Like so. Just one moment, please. And let's look at another market. But this time, let's look at a stock. So we're going to go back to the stock part. Right over here. Seasonal trades. U.S. stocks. Like so. And I'm going to select the first 5 or so. 1, 2, 3, 4, 5, 6. And let's do Google as well. Hang on 1 second, please. Okay, like so. I'm going to be very demanding. I'm going to say, show me stocks for February. So now we're going to be looking ahead that have been right 75% of the time. I'm going to put in a stop. Do a search. Look what we found. We found a stock. 81% accuracy. February the 6th through February the 15th with a 15% stop. But remember what I said. Every trade needs a setup, trigger, and follow through. In the scheme of things, this is part number 1. This is only the setup. The trade needs the trigger. So what are we going to do? We're going to apply a timing signal to it. And timing will tell us whether to do the trade or not. Remember, even without timing, this trade has been right 81% of the time. What does that mean? It means that the closing price February the 15th has been higher than the closing price February the 6th, 81% of the time. How long? Let's look at the history. And again, folks, I apologize to you for the lack of voice. Here we go. 42 years of history. Like so. And here's the trade. So, in the interest of being fair and not stressing you guys out, Dave, I'm willing to take questions now and cut this a little bit short so I don't stress everybody out. Are you okay with that, Dave?
Yeah, sure. Hey, you guys have questions or any? Running a little bit ahead here. Hopefully you got a couple questions.
You want to relay them to me? I'd be glad to answer them.
Okay.
Sorry about that, Dave.
It's okay. Yeah, I need to stall a little bit here for my next speaker too. Hey, how far back do you go on all of your data here?
Usually 40 to 50 years. In the Dow Jones, we go back over 100 years.
Mm-hmm. For S&P, you just go back to the date of the E-mini, or
the date of the full S&P contract, I believe, is
okay,
19.
full S&P.
Yeah. You know, you don't need to stall out for time. I'm glad to continue if you guys aren't stressed out.
Okay. Looks like I'm out of questions. Yeah, I don't have my next speaker here. I don't know if you got a little extra something to show us here. And again, if you're not feeling well, that's fine too.
No, that's
pop.
Okay. No problem, Dave. Let me show you a couple of moves that are coming up. Let me return to the search. In fact, let me show you something very interesting. Oh. Let's get this cleared out. Let's go back to futures. So let's go to the Treasury bonds. let's go to select all months. So what I'm doing here is a big search. And that's the question. Is there anything in Treasury bond futures for the entire year that's been right 80% of the time or more? So the computer is stupid. It will do what I tell it to do. If it finds anything that's been right 80% of the time or more, it'll show it to me. So let's do a search. And here we go. November the 6th to November the 26th. So we're looking at 20 days in the trade with almost 81% accuracy. This goes back to the start of trading in futures. Let me show it to you. Here we go. Here's the entire history of 47 years. And I want to stress, super important, if you don't know even some of the statistics, the methodology you're using, you are not going to make money. You need to have something like this that gives you the history or the track record. If you don't have it, you're going to lose money sooner or later, most likely sooner. So here's the trade, November 6th, November 27th. And you'll notice something else. This trade has never lost money more than 2 times in a row. Therefore, you could do a search of the database and say, show me high probability trades that have never lost money more than twice in a row. Wait until they lose twice in a row and then take the third trade to increase your accuracy. Let's go back. I'll show you something else. Let's look at the secret method. Just bear with me, folks. Here we go. I want you to look at this chart. This is the period of time for that particular trade. And what can you tell me about this chart? It shows you not only is the trade high probability, not only is it a buy position, the size of the move is big. So what can we expect from this trade? High accuracy and a large move. So this is very important information for you to have because it will let you know how big a position you want to put, what risk you want to take. Let's go back and look at another one. One moment, please. Let's do a new search. Let's go ahead and search the US dollar, like so. There's the US dollar. I'm going to search for 80% probability. Computer says there are no trades for the entire year that have been right 80% of the time or more. No problem. Return to the search and lower our expectations and go to 70% probability. By the way, it only sounds like I'm going to keel over. Otherwise, I feel great. 70%. Here we go. Ah, yes. The best rate of the year has been this one. 76% wins, 1% stop. January 13th, January 17th. In other words, a short-term trade. Let's look at the track record. And this is the best part because we get to see the entire history. And again, I'm going to say to you, from the bottom of my heart, if you don't have access to statistics like this about whatever you're trading, you will lose money sooner rather than later. And if you've made money, you've been lucky. So there's a report right over here. Now let's look at one more thing. Let's go back and look at some of the grain markets. Example, soybeans. I'm going to go to soybeans. Like so. question. Show me trades that have been right 70% of the time or more. And here we go. The best trade of the year, October 28th to November the 7th. 72% accuracy right over here. Let's look at the history. Of 64 years. Now I ask you, who gives you the 64-year history on what they're teaching you? I do, because I have the history, and that's the best way to trade. Here's the results right over here. There we go. And we're going to look at one more market, and then if there's any questions, I'll take them. So just hang in there, folks. Let's look at a market that's just now starting to trade very actively, and that's the silver market. So let's go back, find silver. Now you may find this approach to be boring. It certainly has very little sex appeal, but here's the good news, it works. And you can find this at seasonaltrader.com. One moment, please. And we're going to search silver. I'm going to give you the best rate of the year right now. It's right over here. How do we know it's the best rate? Because the computer's been programmed to put the best rate in the first position. And here it is, December 17th to December 27th. 10 days. And let's look at the history all the way back to the start of trading in silver. 52 years. And there it is. And this was the year the Hunt brothers manipulated the silver market. So you can see it's been very steady performance. Right there. Let's do one more. And then I will not torture you anymore with my voice. Hold on, please. How about the Japanese yen? The reason I say that is the Japanese yen has started moving up against the dollar. And I want to show you that there are seasonal thin currencies as well. So let's do a search. And let's find the best trade right over here. 78%, January 25th through February the 21st. So basically what it's saying is this. The Japanese yen against the US dollar should be in an uptrend right now. And guess what? It is. And this information was available before the fact. So let's go forward. I'm going to return to the search. I'm going to do one last one. And that's the euro currency. So just bear with me, folks. I also want to take this opportunity to invite you to my short-term and day trading webinar, which is going to be online at the end of February. If you go to my website, jakebernstein.com, you'll see the details there. And I'm offering you the discount price on the webinar. So if you sign up and take the discount price and save some money. Okay, so let's look at the euro currency. Here we go. And the best trade. And you notice many of these trades come in December 22nd to December 26th. And let's look at the history. And then you'll be rid of me and you won't have to put up with my deteriorating old man's voice. And Dave, maybe you'll invite me back sometime.